All right, Ron, ladies and gentlemen, welcome to our inaugural podcast of Crypto Characters. With us today, we have Ron Quaranta, not Juan Quaranta.
A Juan. I always wanted to be a Juan.
You know, you've got that mystique about you.
Yeah, it's not quite it.
So, Ron Quaranta, he's the chairman of the Wall Street Blockchain Alliance, which is a leading nonprofit trade association that promotes the adoption of blockchain technology and digital assets across global markets. He's also the editor and contributing author of the book Blockchain in Financial Markets and Beyond, Challenges, Applications, published by Risk Books. And he's a contributing editor of Blockchain and Cryptocurrency Regulation. Let's bring it up close so everybody can see. Here we go. You should buy that book. It's a good book. Ron wrote it.
Not all of it. A couple of pages.
Okay, and so, Ron, tell us a little bit about yourself. You know, I know that you've been in financial markets for many years,
Yep.
and we're going to talk a lot about financial markets today. So tell us, what makes you tick, Ron?
God,
makes you
the
love
mystery of Ron. You should have had my wife here.
And what makes you love financial markets and Bitcoin? Where did you do?
So this is the start of my 28th year now in financial markets. I grew up in a generation that when you went to business school, you were going to become the next big Wall Street trader, investment banker. I grew up when I was in school. It was the age of KKR and mergers and acquisitions, and everyone was going to be a big shot. You were going to be Gordon Gekko, but just not a bad guy doing it.
As long as you had the hair.
As long as you had the hair, which, you know, if you're Michael Douglas, you can ride that as long as you want.
I think he still has that.
He's, you know, I want to age that well. But I always was focused on business. I drove my parents crazy. I subscribed to the Wall Street Journal at 13. And every morning there'd be a Wall Street Journal dropped at my parents' house in the morning in the middle of Brooklyn where I grew up. And no one on the block was reading the Wall Street Journal. And I would just stack them up in my room.
Where'd you grow up?
A little area called Canarsie.
I know Canarsie.
You know Canarsie?
I do.
Yeah.
I lived in Brooklyn for 15 years. I think it's 15 years.
Goes by quick. I lived in Canarsie most of that time, a little bit of time in Bay Ridge, and then when I got married, went right over to Staten Island and parked ourselves in central New Jersey. But the business thing for me was something that started early on, and which was weird because so much of my family were blue collar. My dad was a union construction worker. He was some of the construction crew that built the original World Trade Center, or the original. They did the foundation for the Arizona Bridge.
Did you ever go to them when he was building it?
So I
playing the sand over there.
No, worse. So the worst story I have. My mother, who's elderly now, and she's but she still recounts this story eagerly. My father was working a crane, those big boom cranes, and it was at Starrett City, the development in kind of near Queens.
It was already developed at that point.
Yeah, but they were adding buildings over time, and they were working on different foundations. So he brings me there, and I was a young guy, and he parks me on his lap on this big crane. He says, "All right, I want you to, I barely remember, pull this switch or something." And the goal was that this crane should just kind of turn a little bit,
I like where this is going.
which should have been good for any normal kid, right? And I said in my own head, I'm not going to pull that. I want to see what this one does. And I pulled a different switch or hit a different button or something, and you just saw the boom start to come down. and there were construction people, on the site, and it was, I don't know how many safety violations my father and his company got in trouble for, and that was literally the last time I was ever allowed on a construction site. Probably for this, yeah, exactly. Get back home, take your Fortune magazine at 7, and get off my construction site. That was my youth.
You knew automatically that those hands were not made for building.
Yeah, like, this kid's going on Wall Street because he's going to kill someone.
Yeah, that's right.
But yes, and so for me it just seemed to make sense. I grew up thinking that business and financial markets is the way to build things, and the rest, as they say, is history.
So, what was your first job in? Well, actually, I want to go back for a second.
I'm not talking about the construction side.
That's not the only thing that makes Ron Quaranta Ron Quaranta.
That's just frightening.
That's right. Because I also know something that you don't really talk about much, but you made the mistake of telling me once.
You do your research. What is this? What are you talking about?
Are you an Aikido master?
Oh, God.
Are
I'm
you
sorry,
hiding
but
that? Are you hiding that from everyone?
An Aikido master doesn't need to hide it. I am. I'm a third-degree black belt in the exquisite Japanese martial art of Aikido.
Taken off of samurai swordwork, right?
Originally, it's actually one of the newest of the martial arts. It comes from a long line of old Budo, old samurai tradition, but it's really the only defensive martial art that's really out there, and that aligned with my moral code in many ways, right? Anytime someone talks about martial arts, you kind of think about kids in kind of strip mall karate place doing kicks and stuff, and taekwondo, and to me this was a different.
Or as some people say, taekwondo.
Yeah, taekwondo, exactly. This was an entirely different level of study, and so I've been doing that for 22 years, give or take.
Wow,
21 years, give or take. Yeah, I paused about a year ago simply because life gets in the way. Guys like we just don't have time. Crypto and blockchain and work has been so busy. But I had been teaching for over a decade.
You're a teacher?
Yeah.
Where did you teach?
So in Central New Jersey, we had a studio at Dojo where we graduated several new black belts, which was cool. I think a couple of them set their own schools up in Philadelphia.
Oh, really?
Yeah. It's I think the next podcast we should just do it at the studio, at the dojo. That would put you on the map.
That would be a ton of fun. We'll see who can tap who
taps out first
with a wrist lock.
Yes,
we'll do just wrist locks, an homage to Aikido.
An homage, indeed, and then lots of beer and scotch afterwards. But it's really interesting because for me, I wanted to get authentic, right? For me, it's always about I want to get to the core of something, and so my teacher his age is a mystery. He might be 80, he might be 112. We don't know. But he's this little Japanese guy from Japan, and he comes over and he teaches, and he is the most frighteningly powerful human being I've ever met in my life. And he's all of like 5 foot tall. But it's an interesting art. It really is.
I took a little bit of it many years ago, and it was really fun.
It is. It is. You can hurt yourself. Like do not walk into this thinking like Aikido is not painful. I've known colleagues who have broken stuff. Everything from I watched a colleague bust a collarbone just because he landed very badly. Yeah, and so it's serious. It's a real martial art, but it's more than just the physicality of it. As you know, it's that kind of mental, spiritual focus and discipline, and you bring that to every day in many regards. That kind of redirection is something I've used in work life, let alone at the school.
Yeah, no, I agree. I think martial arts are great. And when you get deep enough into it, what happens is the fighting spirit that you already had in you because you were doing it in your work, it kind of shifts your perspective. Mm-hmm. So I think it gives after you've done it for a while, it gives a really nice perspective about everything, mm-hmm. and helps you kind of get out of struggles you may have at any given time.
Yeah, exactly. And not to belabor the whole martial art thing, but one of those core tenets of Aikido, again, as you know, is relax, right? This idea that if you physically relax, you can handle attacks, you can handle struggles better, and the philosophy of it spills over into everyday life. Like if you think you're relaxed, you're not, and continue down that road of teaching yourself to relax. Gives you a different focus on your day-to-day, which is really helpful. I mean, look at the world we live in today. Like, more people need to relax.
Oh, yeah. Social media is a real problem with that, too.
Oh, yeah.
I think that the reason why our country's divided so much is because of social media, because people aren't relaxing.
Yeah. And social media, and then we're way off course again, and I'm sorry, but social media creates the urge for outrage in my mind. Like I'm not on Facebook or Instagram, I'm on LinkedIn and Twitter for business for the most part. But the more I see people getting more and more deeply involved, and at a younger age involved, social media forces the worst instincts out of people. As a matter of fact, there's a study recently, yesterday I think I read it, it was that the majority of people who follow or read postings on Facebook or Instagram tend to feel worse about themselves.
Yes. Yeah.
Right? Did you see that report?
I didn't read it, but I heard a number of people talking about it.
And it because it gives you this false picture of other lives, which implicitly tells your subconscious, well, your life is terrible, and that makes you feel terrible, and people act on that and live on that. That's just not a way to live.
Yeah. No. And actually, there was a fairly large report that's done. You know, one of the things I want to do when this podcast really becomes successful and takes off is I want to have someone that can also, you know, be here with us to research, to kind of go find the things that we're talking about, so you can have like instantaneous.
And pop it on the screen.
Yeah, well, you know, I mean, to the extent we'd have to hold it up. We're not that fancy.
We'll do that for you guys.
Yeah, exactly. But there was a really detailed report about uses of words in social media.
Mm-hmm.
I think it was, and they talk about the length of posts and all about the negative posts.
Yeah.
I suspect. I think that what gets the most eyeballs are negative things to begin with, and that probably has something to do with the fact that human beings are geared towards negativity.
That's right.
As a survival instinct.
Yeah.
Because if it can kill you, you better
be
understand
negative about that saber-tooth tiger. It does want to kill you,
and you'll survive.
Right.
If you do.
That's
you know?
right. That's right.
So yeah. All right. So now, we've gone way off topic, but that's okay.
Yeah.
That's totally good. I mean, that's more.
We're here for 3 more hours. It's fine.
You can press fast forward. They have a fast forward.
I think they do. Yeah.
Okay. All right. So let's get back to markets. So and I want to talk to you about what you did and your experience in the financial markets, but I want to bring it back to the fintech world.
Yeah.
So, you know, blockchain in particular, although you know, one of the things that I'd like you to tell us all about, Ron, is what is Bitcoin?
Oh, why would you start with that? We're not starting with that, are we?
No,
you want to start with financial market stuff? All right.
No, we're definitely not doing that.
Okay.
But let's talk about your
God.
financial markets experience, and particularly your experience there. And I think that I've heard you talk about it, but one of the things that just jumped out at me when I heard you talk about all of the chaos in the paper world and the reconciliation process was, well, this is what blockchain is for.
Right.
So I want to hear about the little hamsters that ran up and down the stairs carrying messages, and the guys with the tape and all that. And then I want to bring it back. I want to make sure that you don't let us forget to talk about, you know, I suspect that it might have drawn you to blockchain a bit. I suspect, but I don't know. So I kind of want to get into that.
Wise suspicion. So I'll give you the boring archaeology of it. So actually, my first job out of school was with Manufacturers Hanover Trust, which is long gone.
Manny Henny. I remember them. That's how old I am.
And I was an export letter of credit document checker. First job.
What on earth does that even mean?
So
I could take a guess, but I suspect I might be wrong.
When to this day, when we do international trade, you export products, you import products, and you'll see how this all ties, including the Wall Street portion of my career, which comes right after this. How all of this ties to blockchain technology. When you ship goods overseas, in this example, you generally don't know the other party or don't know them well, right? And so you need intermediaries to facilitate those transactions. And those intermediaries take many forms. It's your company that builds the widget that you're selling to Europe, for example. Your freight forwarder that will help package up and ship and handle all the customs forms to ship it to your bank that will manage how you get paid for the products you're shipping when they arrive. Your insurance company who manages how do we insure Jason's container because, you know, act of God or whatever it may be. And the import party on the other side of that has the exact same parallels. They have a bank, they have an insurance company, they have a freight forwarder. And so the relationship around letters of credit, which is a legal, essentially series of contracts, this is all the documentation needed to make that transaction happen. And for generations, it's been stacks and stacks and stacks of paper.
But that, so let me just step back for 1 second.
Yeah.
Letter of credit, people deal with on a regular basis, particularly if you're going to do leasing or something
Correct.
like that. Banks want that. So that, and what that is it's a guarantee from the bank that if you call the letter of credit, it will be paid.
Yes.
So I understand what that is.
Yeah.
But how does that apply to the export world? Is that where the large amount of paper comes in with the export?
So right. So a letter of credit is a part of the contractual obligations for all of those parties, right? And that means a packing list, a bill of lading, which is the document that ensures it's being put on a ship, and the insurance documents, and the order and invoice ID, and all of the paperwork to make the transaction happen as required under the letter of credit. And a document checker, back in the day, it was as sexy as it got. It was Wall Street, here I come.
Checker.
I would literally be given, back in the day when I was doing it, I suspect still do, a stack of papers, sometimes this high, and a pencil, and essentially a copy of the letter of credit, which would detail it has to have this, and it has to have this document, and it has to have this counterparty, and all this information. And against that letter of credit, you would have to check every square inch of those documents to make sure it matched the letter of credit.
Okay.
Which took forever, which was an inordinately inefficient process. And now there were banks and banks of us at these desks with piles of documents and pencils and rubber bands that you'd wrap the documents in. And until those documents got checked, no one got paid. Until those documents got checked, sometimes goods wouldn't be released at port.
Really?
Right. And so
I guess you couldn't do that with perishable goods then, right? Because they would.
Well, they would have a different.
Probably rot.
Right. Well, exactly. And there are examples where, and the ancient history for me, some of those were food shipments, which were, are they certified? Are they refrigerated in a refrigerated container? How long will that container need to be in port to be delivered? What is the deadline to make sure these foods don't perish? Essentially, don't rot. So it's wildly inefficient.
Well, right there, I mean, if you just tokenize the fruit,
Tokenize the cantaloupe,
put the cantaloupe on the blockchain, then
everything
you
will
won't
be
have
fine.
to worry.
Yeah, exactly. In theory.
So, all right. So how? Here's a question for you. How long would it take from the time that you would get your stack of documents until you got to it? Was it days, hours?
It
weeks?
depended on the size and type of document.
Okay.
A $100 million letter of credit got more deep attention than a $500,000 letter of credit that we've seen 15 different times.
Okay.
Very relationship driven in many regards, meaning if you were a big corporate customer, your pile of letter of credit got moved to the top of the stack pretty quickly, and it was given dedicated resource. It depended on how complicated the documentation and the legal requirements were. And I've seen, no exaggeration, letters of credit that, by way of example, if the address of one of the counterparties was, one State Street, STREET, and as badly inefficient as the process is, I've seen documents rejected because it said one state ST period. And people would reject those documents because they literally didn't exactly match the letter of credit documentation. And by the way, these were documents that were typed, meaning the forms were put in and they were typed. These weren't belted out on a computer. That's how far back I'm talking.
Okay, so that's one level of pile of garbage. Now let's go to the next thing.
Yes.
We're going to tie all the stuff.
We're going to tie all this together.
You were on the stock market as well.
I was. So
How long were you a monkey checker? An export checker.
A monkey checker. As you can imagine, that didn't last long.
Yeah, I mean, how long did you last?
I don't think I lasted 18 months. I think it was less than 18 months.
I'm surprised you just as long as it took to get a new job.
It was. I think I was 6 months in and I realized I'm dying. I can't do this. I literally feel my brain dying as I sit here. And I was a nerdy student. Like I tried to, I was top of class or close, and I was always, trying to be Alex P. Keaton in school. And
that was such a good show.
Family Ties. For you young people out there, worth looking up.
Really was.
And I tried.
He was a young Republican.
He was a young
Although now
Republican.
I think he'd be a young libertarian if they were redoing that show now, right?
That show would never be allowed on TV now.
I mean, which ones would? You probably couldn't even put Friends on there now,
No,
right?
God no.
I guess you could, well, people watch the reruns.
They do.
It's the reruns
People
are fairly
want
popular.
nostalgia.
But I mean, young kids watch,
Yeah.
like young teenagers watching it. I witnessed some a couple of weeks ago. I couldn't believe it.
It's frightening.
So Alex P.
So that was me in school, and I get to this monkey checking job, as you so politely call it, and I realize I'm dying here. I can't do this, and it doesn't get me any closer to Wall Street. And so I got a job essentially in first at Oppenheimer, and then what we call National Financial Services, which was the clearing and settlement trading offices for Fidelity Investments.
Okay.
And that's where kind of operationally, and I'm oversimplifying, all of the trading that Fidelity did would funnel through, orders would come back and forth through National Financial Services. And so NFS had a seat on the exchange, or multiple seats, and this is when trading terminals started popping up, and we, but again, it's interesting tying it back to this kind of blockchain concept. And it's worth noting that just personally, you've met my wife, and she will tell you, I am inordinately neat. Like sloppy just drives me crazy. And the longer I was in financial markets, the more I realized how sloppy everything is.
How it wasn't the place for you.
You know, you get to the point where it's like, it's got to be me, because everyone loves this crap. It's just it's a mess, you know. And so I'm there, and you get these, you know, they're using computers now, and you're getting these big printers, that, you know, remember the green sheet printers, the kind of old dot matrix things, and you get these reports, and you'd have to.
What year was this?
89.
Okay. Yeah.
88, 89.
All right.
And 90.
That was when Epson was the big printer.
Epson
right?
was
like
huge.
The good printer.
We owned stock.
They were loud. Remember
Oh yeah, no, you heard those coming. And it used to. So the order room used to be like a half a floor of. It was at World Financial Center.
Okay.
And you heard those printers go off literally half a football field away, just because they were so loud. And you'd get these piles and piles of these computer readouts. Again, back to paper, because I can never have a wetted paper. And at the end of the day, at the close of the trading day, you get piles of still floor reports, which were boxes and boxes of rubber band wrapped trading tickets, like the old style you'd see always men on for the most part back then, on the floor of the stock exchange, writing orders and trading against, you know, whatever the seat position was on the exchange, and then sending the orders up to for reconciliation.
Actually, let's go over that.
So I'm back to reconciliations, right?
But before we go to reconciliations, I'd like you to talk also a little bit about what the seat was and who all the different players were when you were on there, because that to me is just, it's still unbelievable to hear when you look at what electronic trading is now.
Sure.
And what even trading cryptocurrency is, and how blockchain can affect all that. So
yeah, I mean, and not a technical definition, but a seat generally was where market makers that made markets in specific groups of issuances of stock. So IBM, for example, would have a position with a market maker, and so brokerage firms would own seats on the exchange to represent and maintain orderly markets, right? So they would generally always be the other side of a trade, or try to match off trades for their customers. And it was a manual process. There would be a person there, pardon me, that would be focusing on, Ron wants to buy 5,000 shares of IBM. Will they be the other side of that trade? Will they maintain an orderly market vis-a-vis price? So if I go to them,
if they were a market maker, would they always maintain an orderly market, or?
Well, they would, because if I went to them and I had a representative on the floor and says, I want to buy 1,000 shares, 5,000 shares of IBM at some ridiculously low price. Well, the market maker wouldn't make that. They wouldn't do that trade. They would maintain an orderly market for trades based on supply and demand that they were getting on the floor.
Now that wasn't done by computer, right? That was actually done by a person. It was someone like you who would say, okay, this guy wants to buy it at this price, this guy wants to sell at this price.
Yep, and I can match them off.
Gotcha. Now, so they would actually be putting the trades together, or they would actually say, okay, I'll buy from him and I'll sell to you, or were they just selling their own? I mean,
So they
how
would
did they do
generally,
that?
and
Tell us.
I'm trying to remember some specifics, but they would generally they would do a markup, right? So they'd buy from one to sell to another, and they'd get a little bit of a markup. The incentive to do business there was to make a markup. Something's right, because the brokerages upstairs that are sending these orders down would charge commissions for the trades. At the floor itself, you could, and I try to remember specifically if it was commission and markup or just markup, but it's I haven't been involved in so long. I'm trying to remember, but
Well, so you just mentioned the brokerages upstairs.
yes,
So tell us about the brokerages upstairs, because you've got the market makers on the floor
sure,
that are dealing with the guys that are yelling with the tickets. Is that right?
yeah, generally.
And then the brokers are upstairs, right? So tell us about the second level of human interaction.
Yeah, it's the human face of how do you interact with the stock exchanges, because the ordinary retail investor, or even institutional investor for the most part, we can get into buy side institutional trading later. You couldn't walk up to the door of the New York Stock Exchange, knock on the door, and say, I want to, I'm Jason, I want to buy some stock. So brokerage firms were the human face of being able to interact with exchanges to buy equities or other financial instruments. And so brokerages would do research on your behalf and offer you the ability to buy and sell on your behalf, hold in custody your shares, and be basically your entry point to global markets.
Who is the you there? Is the you individuals, or is the you
retail investors or institutional investors? So, by way of example, a Fidelity would do business on behalf of institutional investors, which is arguably larger size trades than you or I going to Fidelity and opening a retail account. And there are other business models for that, right? If Fidelity were doing institutional business as they do today, Fidelity's institutional customers are handled differently than Ron and Jason wanting to buy 100 shares of IBM. A Fidelity institutional customer would be, I want to buy 1% of all the stock of IBM or something. So they're both traded differently and handled differently. Sometimes they're done OTC. Sometimes they're done
which is over
the counter, not at the exchange. You can do private deals that would need to be reflected in the marketplaces, but you don't want to reveal a large position or a large trade, pardon me, because you don't want to affect the price. And so institutional business is handled slightly differently. But the principle is the same, that a brokerage firm is your representative at these markets. And that's why a Fidelity or Vanguard or any of the large, TD Ameritrade, any of the large brokerage firms, they would, at the time, would have seats at every major exchange. London, New York, Hong Kong, Philadelphia, San Francisco, Chicago. Those were all seats.
And that was just so that they could get their stock purchased and sold.
That so they can have access to the markets on behalf of themselves and, more importantly, their clients.
Right. Okay. So you've got the brokerages on the first floor. You've got people buying and selling.
Yep.
And they want to buy stock. You go to the market maker. The market maker is the one who makes the decision as to whether or not to do trades. Right.
Yeah, and facilitates making the trade. They can't. I know there's specific rules that I just don't know. They can't arbitrarily say, forget Jason. We're not going to do this trade for Jason Corp or something. They can't do that, but they can reject trades that are out of market.
Right. And then you've got brokerages, which is the second level,
yep.
where that are taking, for either institutional or for individual or for retail, that are taking orders, and they're sending those orders down.
Yep.
And they send those orders down to the market makers?
They would send them down to their position on the floor, and the position on the floor, their representative on the floor, would go to the market makers for those relevant stocks.
Okay, so if one brokerage house has a number of orders for 10 different stocks,
yep.
then they'd have to have their person or people on the floor go to each separate market maker to purchase or sell the stocks that they have.
Yeah, I mean, it might be that one particular post would have 3 of those stocks, for example, and so you'd get 3 of those trades. You'd do them with the one post, with the one market maker.
So,
but that was the reason for runners on the floor, right? There were young guys generally running around, 18, 19-year-olds running around with orders.
Were they literally running?
Literally running across the floor.
Because they had to, right?
They had to.
You need to get it as close as you can to when it's being made so that you can be assured the most accurate pricing that's closest
That's
to what
right.
that is.
You don't want that price to get away from you. And the inefficiencies behind all of that are part of what drove so many of the regulations and evolution of financial market regulation that we've seen. So best execution, for example, or, the implementation of best bid and offer, the implementation of basically consolidated tape, the idea that there should be one price feed or one price source for trading. Back in the 20s or 30s, for example, you might have thought IBM was $40 a share, but I know the guy down the hall thinks it's 50. So I'm going to buy from you and I'm going to sell to him. And it wiped out arbitrage anyway, but it certainly made markets more fair. And a lot of the...
When did that happen? At what point? Was that in the 90s?
So now you're really testing my knowledge, my memory. So the original regulations for things like best execution promulgated earlier than that, I thought. I think it was in the 80s, maybe in the late 80s. I could be wrong. I'd have to double check. Yeah.
But they couldn't go. But they couldn't go back. I mean, it was much harder. It sounds like it would have been much harder to reconcile what actually happened when and what the values were, because you don't have timestamps that correlate to when things were done. I mean, you would have it within a couple of minutes, right?
You did, though. I mean, you'd have. So even before the 80s and 90s, to this day, you have punch cards, timestamps. So you could timestamp a trade ticket at the floor, and you'll know that this guy wanted to buy this and executed this at this price at this time on this day, and here's that those were the floor reports. Those would get stamped.
Those were not the pieces of paper that would be thrown away at the end of the day. Then.
No, they were never thrown away.
Okay.
They were stamped, packaged up, and sent to the appropriate brokers
for
a reconciliation again.
So now,
monkey job. I couldn't get away from reconciliation.
Right. I mean, it was clearly it's necessary to have if you want to have high volumes of economic activity.
Sure.
But it's just, I couldn't imagine having more mind-numbing work, because all you're doing is just cross-referencing things.
Yeah.
So it must have been really hard on people that did it. I mean,
it was really hard on people that did it. It was even harder on the people who had the more stressful aspect of the job, which was being a broker on the floor.
Right.
Being that market maker, being a runner. I would never have wanted to be a runner at the time. But the real challenge is not just the mind-numbing aspect of it, which there's so much work that is mind-numbing, is the cost associated with it, right? So when you think about those reconciliations, there is the cost in time and resource, right? You got to pay banks and banks of people to do these reconciliations. The cost of what they used to call trade breaks. And what I mean by trade break is because it's a lot at the time was handwritten, sometimes orders would be written incorrectly. And so I thought I bought 1,000 shares, and someone wrote the ticket as 10,000 shares. Just a glaring example. Well, that's a 9,000 share difference, and the brokerage firm is on the hook for that. The brokerage firm has to allocate resource to maintain and reconcile these trade breaks, these differences between what someone thought they were doing and what they wanted to do. There would be trades that were decayed. Back, if you remember Wall Street, they claimed not to want to do the trade. They didn't know the trade. That was not infrequent.
So would you have arbitration over that? Or
there would be. Sure, there would be sometimes. But it was, in rare instances, again, it's a relationship-driven business. Important clients would be made whole in many ways. I mean, I thought I bought 1,000 and you just made me buy 1,000,000. That's probably getting arbitrated in some way. I thought I bought 5,000 and someone wrote the ticket for 6,000. You'll come to an accommodation with the client. You'll figure something out.
Seems like there's also a ton of room for human error.
Ton of room for human error. And again, I'm still referencing this kind of period before computers, but let's not forget fat finger problems, right? There's still people with digits hitting keys, and to this day you'll read about someone hitting 1 billion instead of 1,000,000 or some ridiculous trade.
I've been trying to lose weight in my fingers for years.
I know. My fat fingers have gotten me in trouble sometimes. But the thing, just going back to your original question, the wild inefficiency of it, as much more efficient as it was compared to writing prices on a chalkboard in the 20s and 30s, for example. given the pace of technological innovation, it was still wildly inefficient. And so I think the thing that brought me to blockchain, particularly for financial markets, were a couple of things. One was I had colleagues that said, I've got a customer who wants me to invest in Bitcoin, but I think it's illegal, Ron. What do I do? Which is part of the story. And the other one was the technology. Will the technology allow us to streamline so much of the stuff that we talk about? And to be clear, a lot of this is an oversimplification, right? There's so much more that you and I haven't peeled back. I mean, we haven't talked about anything like stock loan and stock borrow, like all of the stocks that are moving. Sometimes positions will sit with brokers, and brokers get to lend and borrow with them against each other, against other firms. And it's a multi-billion-dollar industry, which I won't bore the podcast with, but wildly inefficient. Again, human reconciliation, human error. For decades, it was, for years when I was there, it was pencil and paper reconciliations, and then we used spreadsheets, and you made one wrong mistake on a spreadsheet, and you created more problems. And when you look at the advent of what blockchain as a trusted ledger in a trustless environment allows you to accomplish, it begins to reinvent what financial markets could be, which kind of appealed to me directly because I like things very neat. And that's intriguing. Imagine not just you hear the argument a lot, right? It's just about getting rid of jobs, Ron. The innovation does that regardless.
I mean, let's go back to the Luddites, right? Was it London? I think they were in London where they were destroying machines.
Yes.
Was it
on the wake of the industrial?
Yeah, it was in the wake of the Industrial Revolution.
Yeah.
I forget what they were. They were tearing apart all of these terrible machines that were going to take away.
I think it was the loom, and I think it was the balers, the things that the automatic crop for cotton and wool, cotton baling, because it disintermediated human beings directly, which at an individual level is
I hate that word.
Disintermediate.
Disintermediate
For the rest of this podcast.
I was going to name the podcast "I Hate Disintermediation," but I thought it would be too long.
You named the podcast, and what was it again? It was Crypto Characters, Libertarians, and Beer.
That was the initial one. That's right.
To this day, I've not seen a single beer in this room.
I don't want to get in
Just so you're
trouble
all
from
aware.
our sponsors, which, by the way, we really should do a sponsor break for 1 second. So, this podcast is brought to you by water. We all have it, ladies and gentlemen. We all need it. We wouldn't be here without water. Water, thanks all of us. Thanks you, Ron, for being made up of 90% of it. And it's a really, really big sponsor of this podcast. So
you're going for better sponsors after this, right?
I'm sorry about
okay.
that. I didn't mean to kick you, Ron.
That's okay.
No.
I know him. That's fine.
That's right. All right. So moving back on from water for a second.
Yes.
Disintermediation, right? We'll talk about beer later, because one of the things I want to know is, what is your favorite beer?
So my favorite beer generally is, and I haven't had beer in a while, which is Yingling.
Yingling. Right, I want you
Why'd
to
you
think.
make that face?
I want you to think a little
It's the
harder
oldest
about that.
brewery in the United States. I honor the oldest brewery in the United
And
States.
then we're going to go back at the end, and you're going to think of another beer that also would be your favorite.
all right, I'll give you a second one. I do not mind a good cold Guinness.
Okay, all right, that's
Which
fair.
is drinking like a loaf of bread. There's so many calories in Guinness, but
Yeah, but it's.
I worry
tasty.
about that stuff. I'm getting older.
It's tasty.
It is damn fun.
I find nutrition to be fascinating, and
I'm going to say you find nutrition to be a waste of time.
it depends if you're getting it from beer. It's not, but there's the ketogenic diet that a lot of people do,
Yeah.
which is supposed to really fill you up.
What is ketogenic? So I haven't researched it. So I don't.
Oh, really? Okay.
Yeah, seriously.
It just means it's a high-fat diet with very little processed.
So like paleo is the same thing, isn't it? Or
Yeah, it is.
Okay.
It very much is. So when people say that they're in ketosis, what it really means is that their body is processing the fats in general, and the fat from their body, which is why people lose weight so quickly. But one of the things that a lot of them, and we've been eons behind nutrition for. If 50 years ago you'd have eaten the way that we told you to eat, like the pictures of a healthy breakfast on the Rice Krispie cereal boxes, right? Remember that?
the pyramid?
It was orange juice, and it was like bacon and eggs and cereal.
Oh,
right?
sure.
So, it was stay away from fats. Well, it turns out that fat's actually really good for you, and in fact, if you want to feel full and satiated, you need fats and proteins
Right.
primarily.
So have you seen this complete digression? So that's probably tied to. Have you
No,
seen
there's nobody there.
I know, but there will be.
But I like talking to people.
We have to
It's
face the
nice.
camera. You'll have an audience. You should face them occasionally.
Right.
So that's probably what drives. Have you heard of this bulletproof coffee?
Oh, I love it. It's great.
Have you tried it? I haven't tried it yet.
Many, many times.
It's basically coffee and fat, right? Or,
That's exactly
okay.
right.
Is it good?
It's phenomenal. I love it.
Like you can go to a store in Manhattan and buy a bulletproof coffee. Or do you have to make it on
I think
your
they
own?
have it at Whole Foods, but when I got involved in it, I didn't. When I started doing it, I just you didn't have it there. So I went up, I looked up bulletproof coffee. Essentially, it's like 8 ounces of coffee if you want. Right?
Okay.
They say, oh, you want to get this super duper special coffee.
Right.
Just use the
Just
coffee
regular
in my
coffee,
house.
maximum.
Exactly. So, and then I took, you know, the ball jars.
Yeah, sure.
I put it in a ball jar.
Yeah.
And then I take, I think it's 1 tablespoon of butter and then
Butter,
butter, but it's from grass-fed cows. So you get like the carrot gold.
Specifically,
Yeah.
grass-fed cows.
Yeah.
Okay.
Because you want it to be, you're trying to mimic natural states.
Got it.
And then you take one of those. I just chop it up a little bit. I toss it in there with the
Okay.
hot coffee, and I take a teaspoon of coconut oil. Now he calls it like brain fuel, but it's just coconut oil. It's organic coconut oil.
Okay.
So you take it, and then I take the ball mixers that you get from like those GNC.
Yeah, sure.
And I pop it in there. I close the top. I just shake it really hard.
Okay.
And then you got to let it out because it can be explosive. So you got to like open it
A little bit at a time.
It's this nice thick concoction that you make. It really it fills you up. Amazing.
So it's basically coffee and breakfast. in a
Yeah, that's
way,
what it
right?
is,
So like
yeah.
you don't need a muffin after you have a bulletproof coffee.
As a matter of fact, you shouldn't have a muffin.
Okay.
Because you can eat all sorts of, you can eat high fat content, high protein. You could eat exactly the way they told you to never eat before.
Right.
Right? And also have carbs. You want to have like vegetables and all that
Yeah.
stuff. Because if you don't eat carbs and you're just eating too much protein, then your body actually goes into glucogenesis, which is,
you've
it
researched
converts, and that's just the process of converting the protein into carbohydrates.
Got
It
it.
breaks that into carbohydrates, and then it takes carbohydrates there. So you still need it, right?
Yeah.
But I want to make a beer that is high in fat. I want
A butter beer.
a butter beer. That's it's like, actually I think that's from Harry Potter. But yeah, butter beer.
beer?
We should do that. We should
God
make
help.
crypto characters butter beer.
Yeah, we should make butter beer.
We could make a lot of money.
This may
doing
be the last podcast you ever do after this.
I'm gonna go.
All right,
into
so after
butter
this,
beer.
we'll find the bulletproof coffee place.
That's right,
Essentially.
It's
beer.
really good, and you could make it.
But you can make it at home. It's not a special. Get the recipe online.
Yeah, I mean, I literally just told you what it is. It's not particularly.
I mean, I don't know if
Difficult.
you're a trusted source here. I mean, I'd have to go online and check.
You need a token.
You just told me to make coffee and throw some butter in it.
That's why blockchain is important, because if I was on a blockchain, you could tell if
it was authentic and true,
exactly
and where it came from.
right, and then I could be demystified. Right?
Yes.
Or disintermediated.
Or disintermediated. Now I don't need you to make that coffee.
Okay, so
Sorry, everyone.
now, and we're obviously talking about, this is the first podcast. It's a redux because the first one we had did not have great audio.
No, it was a lot of fun. You guys missed it.
Yeah, you'll never see it. We've hidden it. But,
When I finally pass off, make sure my wife sees it.
we'll play it at your funeral.
Oh my. Okay,
Can you imagine?
moving on.
All right. Okay. So, so let's talk about how blockchain, you think, can get rid of all of these kinds of inefficiencies. I'm assuming that's really what kind of drew you to it, and then and maybe you tell me that story in the lens of how you kind of got into the blockchain world, because you're one of the very well-known voices, I would say, in blockchain.
Okay.
People come to listen to the things you have to say, and everyone.
Not
respects
here.
your
This room is
advice.
empty.
Well, but people will be watching. They're behind the mirror.
Got it. So it's interesting. One of the things that was, when I came through financial markets, we knew it was inefficient. Right? You kind of know, like, this is a pain in the neck. You're writing things with pencil, and now you're reconciling on spreadsheets, and if you're not careful, it's a mess. So you kind of know things can be better, but we live in a world where you don't know what you don't know. You don't know what at how it could be made better until you get the innovator that says, here's why we're doing this and here's why it's wrong. And so when blockchain first crossed my radar, it was, I think it was 2012, actually. And, certainly in the context of Bitcoin. But the underlying technology, and I'm not a deep technologist, I've just managed enough, and I use this joke all the time, and I managed enough technology teams to ask really stupid questions. When you look at the features and characteristics of blockchain, this kind of immutable, it's a misnomer to call it a database, right? It's a transactional register, ultimately.
Right.
And when you look at it through that lens, and you look through, when I looked back over my career, and so many others that I had known in the space, we realized blockchain could potentially reinvent that how we do what we do, right? So by way of example, when you're looking at that transaction, going from a broker's trading desk to the floor, to a market maker, back to the trading desk, and all of those steps to reconcile, again, that word, reconcile a transaction essentially between two counterparties. Before blockchain, we never had an opportunity to say, what if we didn't need all those steps? Which is a radical thing to say, because you need the steps in concept or to accommodate what those steps accomplish in some way. And when you look at the original Bitcoin blockchain and the Satoshi paper and all that stuff, the ability to operate in a trustless environment mirrors some of those transactions that I had seen. So again, perfect example, if you're selling IBM in 1950-something or 1960-something, and I'm buying IBM, we have a lot of intermediaries in between us to facilitate markets, fair and orderly markets, but you and I don't know each other. And if we didn't know each other and we met each other on the street and I said I want to sell and you said you want to buy, you wouldn't trust me. And I wouldn't trust you, right? We wouldn't have known each other. And so when you look at what blockchain allows you to accomplish in that trusted and trustless environment, the ability to remove those spaces that caused friction, the reconciliation challenges, the procedural things that really waste a lot of resource. Blockchain to me made sense, and now that's a bridge almost too far in many regards, because we're still not there yet. I mean, how many reports have you and I read since January 1st? Well, it's January 8th now, talking about how, for the past 2 years, people have spent a lot of money on proof of concept, and they haven't really gone anywhere. And that makes sense. I get that, because a lot of how we do what we do is driven by relationships and driven by the intermediaries who own and drive these marketplaces, and not just financial markets. But at a proposition layer, a proposition level, blockchain solves many of those inefficiencies that I've seen over the past couple of years.
So now, you actually mentioned something that I think is an important discussion to have, and I'm interested to hear what your opinion is. Mm-hmm. But let's talk about where we are in the growth of blockchain as a thing. It's been around for 10 years now, right? January, I think, 2nd or something like that?
I think it was the first, the paper was released 2008, January 2009, Genesis block.
Event, right?
Yeah, was January 2009.
Right, so it's out for 10 years, and, how long have we known each other now? Has it been 3 years, 4 years?
It feels like 30, about 4 years. 3 years and change?
Yeah, something like that. And I remember what the industry was like back then, and it's very different from what it is today.
Yeah.
You would talk to people, and you'd say, "What are you working on?" And they'd tell you all sorts of stuff with words like disintermediation.
Down with the banks, down with brokerage firms, right?
Yeah, the crypto libertarians, man.
That's right.
They were a big. I mean, they were a driving force of a lot of this. You got to give them their due, right? But a year or two later, but when I would talk to people, say, well, okay, so what projects are you involved with? And you could tell that none of their projects had been monetized. Yeah. This was something that people were interested in. They saw a lot of potential, but there hadn't been anything there. And then, let's say 2 years ago, people started to talk about stuff that was being done.
Yeah.
We're doing this now. And this past year in 2018, I personally was hearing a lot of people have discussions about what they were rolling out.
Yeah.
And so my take on where we are is that you're going to start seeing the first generation of second generation blockchain.
Mm-hmm.
And what I mean by second generation blockchain is people are using it now. They've taken it from the cryptocurrency that was its genesis.
Yep.
And they've got another foundation that they're using it for. They've vetted everything out. Mm-hmm. They've got a product, and they're about to roll out the product, or they're this close to rolling out the product.
Yeah. And
they're in a serious funding stage where actual investors that want to make money can go and say, "Oh, that's what you're doing." Mm-hmm. So I kind of see it as the next level of blockchain's evolution. Mm-hmm. Was kind of last year. We'll see a bunch in 2019, and maybe it'll probably round out in 2020. Yeah. But that's just my guess. I mean, what are you seeing? Describe it from like 3 years ago to now. And how you see it going.
Yeah, so I agree with you on that kind of morphing of perspective. The crypto anarchists that everyone kind of said were terrible, this wouldn't have happened without them. So credit where credit's due, and looking at a world that could be decentralized and disintermediated, and where everyone could be their own bank and brokerage firm is in many regards a noble perspective, a noble ideal that no one in the world is prepared for, right? And most people are not prepared to be their own bank.
And governments don't want you to.
And governments don't want you to. And you could take this kind of conspiratorial perspective of governments don't want you because they want to control you, and there is some veracity to that.
Fair point.
It's an absolutely fair point. And the other side of that is, particularly from a democratic government perspective, is they have a responsibility to protect their citizenry in many regards. And so in the wake of so many of the things that we've seen that have been troublesome or problematic around blockchain or crypto assets, you can imagine governments want to protect almost from an investor perspective. Not just crypto assets don't invest in these, but how many people would get in trouble if they were their own banks, for example?
Just from a regulation perspective, or someone chasing them?
Both. I mean, I have colleagues and family members that I guarantee you would have to flee the country if they became their own banks, because they would just mess up so badly. But that evolution that you're talking about is real. And I agree with you, because to me it all maps to, and everyone talks about the Gartner hype cycle, and that's all fine, and Metcalfe's law from a processing perspective, and how
Actually, let's talk about that when we're done with this.
Yeah.
I'm going to write that down. I don't want to forget to talk about it.
Go for it. But I think what's really important is something that I am very dedicated to personally, is what I call the education curve. And the parallel for me is the internet. It's an overused parallel, I get it, but I think people are missing some of the important stuff. Everyone talks about eyeballs, the internet boom, that's Pets.com and $5 million Super Bowl ads with a sock puppet. And,
By the way, that was by far some of the best commercials.
Right. And they were all absolute failures, almost across the board, right? I think what's happening is more fundamental. And what I mean by that is, look, since you and I started talking, and certainly since we got involved in blockchain, every major technology provider is deeply involved. You name it, Microsoft and IBM and Amazon Web Services and Oracle and SAP and on and on. This is an extension of the evolution, in my mind, of the internet. And I don't want to overuse the phrase internet of value, but we've talked about it before. We all take the internet for granted, universally across the board, right? We use it every single day, everywhere, and almost always.
I mean, I'm pretty sure that when I come in on the trains, that if the internet went down, all the delays we have on the trains would cause a riot.
Oh yeah, you'd go all zombie, and people would start killing each other.
It's like, it's the Selma. Someone said to me, well, as long as I have internet, I almost don't care.
Right. Now, most people are not aware of the origins of some of this, the very sloppy, very friction-filled, very inefficient genesis of how the internet became, pardon me, the tool it is now.
Well, I mean, Al Gore was the one who invented it. Right?
He did.
He invented that and global warming. I'm
wow.
pretty sure he invented global warming.
I disavow any statements coming from Mr. Nagi.
Just having some fun with
I don't disagree with you.
That was, by the way, do you know that statement that was being attributed to him
Mm-hmm.
was, he never actually said that. Apparently what he said was he was on the committee.
Yeah.
He was one of the committee members that approved the funding for the initial internet. I forget what it was called. It was like DARPA? Was it DARPA? DARPA.
Well,
okay.
it was ARPANET and then DARPA. So DARPA
Right.
was and it all came, as most of the audience will know, out of an original government program, which brings me to one point about Al Gore, by the way. You want a lifelong career making a lot of money? Be a political marketing person.
Right, I guess that, I mean...
Whatever party, doesn't matter, you will have a job for all of your life.
You know, the funny thing is, and I don't mean this in a nasty way, that it was really after he lost his election, that was really almost what put him on the mark. It was with his movie. What was the movie?
Inconvenient Truth.
An Inconvenient Truth, which I thought was a good movie. I liked it. And really, when he went out and started talking about global warming, that he really became. I think more people knew him.
He became a brand.
Yeah, like a celebrity, kind of a celebrity.
He became his own brand, advocating for something they believe in.
Outside of politics.
And that's where he made the most money.
You know, he could have been a Bitcoin billionaire too.
He could have been,
but he was just too late.
He was
too early in the cycle.
He was too early in the cycle. What was the original?
So DARPA, we were talking about.
But the sloppy.
What do you mean?
Turf war, lack of standards, lack of best practices in the evolution of the internet as we know it today.
Mm-hmm.
There are very few people who understand the challenges of DARPA and ARPANET and the interactions with NetWare and how the internet does what it does today, which is seamless universally for the vast majority of people. And yeah, you've got technology people who manage internet connectivity at a corporate level and cybersecurity challenges and all of that. But when you say internet today, grab anyone and say internet, they think of a monolithic thing that's out there that we should all have access to. And for the most part, we do. Not realizing it's a network of networks and a very sloppy series of networks that took decades to evolve. That's the parallel for blockchain. And,
great parallel.
And we're at that point where we're not universal in the definition of what the Internet of Value / blockchain is. We see, some of us, and a lot of us see that coming on the horizon, or in that sloppy middle.
You know, I don't like the term Internet of Value.
Why?
I think it's loaded. Don't you?
Yeah, fair.
Like, it's only Internet of Value because blockchain is associated with cryptocurrency, right? Isn't that really what it is?
Yeah.
Or is it just because people want a name? You have the Internet of Things, which is actually cool.
Yeah.
The Internet of Value, I mean, it's like another thing like DLT or blockchain. I mean,
yeah, I think Internet of Value as a phrase was meant to be a bridge as part of that education curve, right? Because when you talked about the internet, and then you tried to talk about blockchain, you had to make a comparison, a quick kind of buzzword comparison, and Internet of Value was a quick nugget to define blockchain at the most simplistic level. Is it accurate entirely? No. Is it representative of what could be accomplished by definition for the majority of people? Sure. Yeah. I mean, internet.
That's right. I take it back. I don't dislike it. I still dislike disintermediation, but.
Oh, I'm going to keep using disintermediation. I got to get water. I know you're going to yell at me because we're still rolling.
We have water right here. So, do you want to get it or?
I
want to hear what you have to say.
I'm going to talk to the camera now about our host while you're getting some water.
All right, here you go, sir.
Thank you, sir.
What? Oh, here. No, I got
all right.
A real cup, right? We don't believe in plastic.
This is going in style.
Yeah, that's right. We're fancy glasses. I'm going to put this over here.
Okay.
I don't think anybody will mind.
I hope the audience doesn't mind.
No, not at all.
So, where were we? Thank God this is not wine or beer.
DARPA. I know. It would get. I don't know if it'd be better or worse. We were talking about Internet of Value, DARPA, and kind of how sloppy it was.
Yeah.
So, no,
But people don't see that today, right? People don't look at the internet and say, "My God, what a sloppy mess. It's pervasive. You expect it. The old parallel, I think we did this in the beta of this podcast, which was there was a time in American history where someone would walk into a building and you would ask, does this building have electricity? And that's true because
Wow.
many buildings didn't.
I never thought about that.
Right.
You're absolutely
Now,
right.
is there a building anywhere in this country, minus an abandoned barn someplace, that you would walk into and doubt that it has available electricity
No, I
or
mean,
lights?
if anyone lives there, no.
Right.
Outside of something like one of those huts that you see where it's a makeshift housing.
Right.
Where there's nothing but a
Right.
tin wall and some
Sure.
tin walls and tin roof. Yeah, you're right.
Right. And now ask that same question about the internet. Right? Minus, someone God forbid who's homeless, or minus a makeshift tent, or minus an abandoned barn someplace, you can walk into, I would argue, any building in this city,
Oh,
in
yeah.
some way, shape, or form, be able to access internet. Right?
Oh, well, yeah. I thought you were saying electricity. That's
Well,
absolutely.
hopefully electricity.
Well, you'd be able to access internet from your cell phone, certainly. But I guess you're right. No, I would think that nearly every building has.
Right.
I mean,
And we don't even need to ask that question for the internet anymore because of wireless.
Yeah.
Wi-Fi and 5G.
wait, what's
coming
Wi-Fi?
up. I'm not going to
Wi-Fi. Tell us about Wi-Fi and Bitcoin. Man.
Why I'm not
Do you
telling
need
you.
Wi-Fi to do Bitcoin?
I still don't know why I'm here.
Do you do
I
Bitcoin?
don't even know why I
or not?
accepted this podcast.
Do you do Bitcoin? Actually, I wanted to talk about Gartner's life cycle and the Metcalf. So, what's Gartner's life
So
cycle?
Gartner's
Gartner?
Okay.
Okay.
The Gartner report on, and I'm definitely going to screw this up, on technology. The
That's
Gartner
the
hype
10X?
cycle. It's the
The hype cycle. Okay.
It's the hype cycle of expectations from a new innovation perspective, then this kind of trough of disillusionment, and then how you come out of the trough into widespread mainstream adoption, and then over time, as the technology becomes obsolete or aged, it begins to fall off and would probably get replaced by a new technology, and then it goes through its own hype cycle as well. And you get this question a lot, right? Everyone asks, where is blockchain in the Gartner hype cycle? And I have absolutely no idea.
Yeah.
We were in the trough of disillusionment. I remember some very learned people telling me that in 2016 and 2017 and 2018. I honestly don't know. I think, and people don't like the phrase I use, I think it's an uneven evolution. And I think it's an uneven evolution because blockchain impacts so many different verticals within the economy.
I think all evolution is uneven.
Agreed. But if you grabbed a financial executive in New York or London, and you said, gave them a Guinness and said blockchain, crypto assets, digital currencies, Bitcoin, odds are they'll have heard what you're talking about or better.
Yeah, I mean,
right?
Yeah, I would say we're better now at this point.
Right. Grab an insurance agent in Omaha and say those same words, and they're probably not going to know what you're talking about.
Actually, I don't think that's true.
Okay.
Only because I know how much you dislike Omaha.
I'm fond of Omaha. I have no idea what you're talking about.
But Berkshire Hathaway's over there, so I suspect. And there was a big
I'm a
debate.
Buffett fan.
There was a big debate between I think Warren Buffett's second-hand man, Munger, yeah, and who was the other one? It wasn't Bill Gates. It was somebody else over whether or not Bitcoin was garbage. And I think it was Warren Buffett who said, "I don't know who to believe between these two." So
yeah, and he's often called it, rat poison or something. I think didn't Buffett call it something bad? He called Bitcoin.
Buffett called that?
I think Buffett called it something negative.
Oh, okay, I hadn't heard that.
I could be wrong, but I think this goes back a couple of years.
I'll take out my phone.
And when you have staff that can check this for us at the next round.
Staff, anyone who wants to do something for free.
He's hiring.
That's right.
So, but I don't know why you said I hate Omaha. I'm quite fond of Omaha.
Right. No, but I do know what you mean. Although my guess is that there isn't a person anywhere that hasn't heard of blockchain or Bitcoin at this point, at least in the U.S., that is marginally involved in some form of business enterprise.
I'll disagree. and I'll tell you why.
Tell me.
So I as you know,
I'm in a bubble.
Are
we in a bubble here?
You live in your bubble on 3rd Avenue in your fancy home. No, as you know, I'm very privileged to give speeches globally, for the most part in the United States, around blockchain innovation across different industry verticals. And late 2018, I had given a series of speeches in the Northern Plains, North Dakota, South Dakota, Minnesota.
When was this?
November of 2018.
When
I would return your phone calls.
They're beautiful.
It was lovely. Just before the
amber waves of grain.
Amber waves of grain. The beauty about North Dakota and South Dakota is, when you land at their airport, you literally there's no congestion at all.
That's amazing. Any
time of day that you drive or go to the airport, you can literally drive. It feels like you can drive to the gate at some of these airports. So there's the beauty of small town life in America.
So you were over there. You were in the Dakotas, you were saying?
I was in the Dakotas and in Minnesota, and Minneapolis, obviously a larger city. Talking to a bunch of community bankers and giving a speech or two to a bunch of community bankers. And in the United States, a community banker is, and I'm sure I'm messing up the definition, has assets under management of $1 billion or less. When you say bank in the United States, 99% of the people think JP Morgan or Citibank, these giant money center behemoth banks. There are, and I know I'm messing up this number, there's something like 4,500 community banks in the United States. Mm-hmm. I'd say less than a third of them had heard of blockchain before I showed up.
Really?
They had heard of Bitcoin, absolutely universally negative perspective. But from a perspective, I'd say a third of them really didn't know what blockchain was.
Okay. 2/3
had heard about it, but thought it has nothing to do with their business. And wouldn't. And another example, I likewise give speeches to the accounting profession. And you're a WSBA member, and you know that WSBA has a global partnership with AICPA. And in early 2018, the numbers might have changed now. Accounting Today did a survey of, I think it was several thousand accountants globally. And just over 50% fell into the category of what's blockchain? Question mark.
How many?
Just about 50%.
When was this?
I think it was Q1 of 2018. So about a year ago. So it might have changed.
Wow.
It might have changed. But think about that.
That was when the Bitcoin had just hit 20,000.
Right.
And Ether was at 1,400.
Right. And just about 50% of all accountants surveyed at that time had never heard of blockchain. 1% said that they were experts. And I've met a lot of accountants. And barring technology people in their firms, I've asked, who's an accountant that considers themselves a blockchain expert? And not a single person has ever said yes. So I get what you're saying, because I think you and I do live in kind of a bubble. We live in the bubble, at least.
By the way, let me just say this.
Yeah.
My perception is complete garbage. It's just based on what I think. It's just from looking on my LinkedIn feed that I can't even open up anymore, because all I see are people pushing whatever nonsense, trying to say that they're in blockchain.
Yeah.
It's like, okay.
Blockchain innovators, have you seen this? Everyone's a blockchain innovator now.
I don't know. No, I should put that on my at my thing. But but seriously though, I literally had to pull away because it was just a barrage of stuff, and you couldn't. It was, for a while, it was a very good news source where people would talk about what they were doing, and there's just you see it, and maybe that's what that is. The people that are on LinkedIn that are doing this stuff, they're actually at the forefront of innovation, at least on some level. They may not be doing it, but they're aware of it enough that they're trying to do something.
Yeah, I think they're
to their credit.
Right. I think there's some subset of the LinkedIn world that's trying to educate their colleagues and their connections. Mm-hmm. And it's not just about blockchain. It's about AI and AR, VR, and synthetic biology and all this other stuff.
Synthetic biology, that sounds cool. What's that?
Oh, that is one of my...
What is it?
Topics of probably for a separate podcast. I'll tell you in 2 seconds.
We'll do another one soon on synthetic biology.
But here's the other thing about LinkedIn, and this is not certainly not a negative about LinkedIn as an organization.
Yeah. But
LinkedIn has fallen down the same attention is currency social media black hole that everything else in the social media space is victim to. And
it's the natural. It's part of the Gartner life cycle, right? I mean, it's
the Gartner hype cycle. That's right. And
cycle.
you can imagine that a LinkedIn is coming off of that peak of adoption, right? And you can test this. You can test these hypotheses. You can grab any colleague in the street, and I would argue over 99% of them has a LinkedIn page, LinkedIn profile, right?
Yeah, I mean, if you're in business and you're actually, if you're in a staid business and you're innovating, then you have to be on LinkedIn. You know, like law, accounting, you know, those kinds of things.
Right.
I find less in medicine. There's it's not really. It's just more for like the professions outside of medicine.
Yeah.
But it's business people that are. I think LinkedIn and social media like Twitter. I think it's great for as a marketing substitute. You don't have to chase after reporters as much, and it's a direct.
You don't need an ad budget.
Right.
Right.
Exactly.
Now here's the problem in my mind, and I'm tying it back to blockchain with a LinkedIn. What's the one thing that LinkedIn does not do for you in your profile?
It doesn't tell you who has a fake account.
That's right. It doesn't validate information.
How did I know that? How did I mean?
Because you've experienced it, right?
Yeah, I mean, there.
We all have.
Yeah, I mean, I think that I don't know how many, but I'm sure that I've got fake people on my.
Oh, sure, absolutely.
I mean, once you hit over 1,000 people, it's just I think it's inevitable. And I'm seeing I get weird emails, you know, from all sorts of people, and you know, from countries that we can't really do business with.
Yeah, exactly.
You know,
isn't that under embargo, that country?
I don't want to have too many people from Venezuela and Iran, you know, on my LinkedIn page.
And peel back the layers of that, right? So a LinkedIn, and it was never LinkedIn's job, right?
Yeah.
They don't validate your employment history. They don't validate your educational history. I mean, aside from everyone who gets and again, I appreciate the effort involved, but so many people go to MIT, and they'll say they're an MIT graduate, and they went and got an MIT certificate for 2 weeks or something. Which, you know, again, that's fine.
I should do that.
But there's education inflation.
Yeah, no, it's
right?
true. Actually, yeah, and that's one of the things that I do look for. Like, if I see something that sounds impressive, I go to see, well, okay, is it actually impressive?
Right.
And you know, which points to another thing in general, which maybe I'm sure that blockchain ties into this in some manner. I don't know what to believe anymore. Like like last night, and I tell only by who posted stuff. But then only
so you don't believe a
sometimes
single
can you
thing I
do it.
post, right?
Well, this is what we're talking about. You tweeted about last night about the 51% attack on Ether Classic.
Ethereum Classic, right.
And so I was like, okay, so if Ron's posting it, he probably spent the time to read an article and make sure it was from a legitimate source. But I just didn't have the brain. I didn't have the bandwidth to delve into it because I had other things I was doing.
Sure.
And when I woke up this morning, it was everywhere.
Yeah.
You know, the 51% attack.
You heard it from me first.
Right, and I did. But you know, that goes to show you there's been a promulgation of podcasts, and I think that it's part of social media and the de-evolution,
right?
Really of classic media, and the showing of so many varying biases on every side of every participant in media that you have to we actually need fact checking. I didn't jump and post a story because even it came from someone I trusted, so it was I knew it was true, but I wanted to understand it and read it because there's so many sensational headlines.
That's right,
and that's part of the issue that you have now in getting information, and it's like trying to scoop other people on social media. You have to be careful of that. You know, if you want to cultivate your reputation, and not do something foolish. So I think you're right about authentication.
Yeah, and I you know, it's hard to do. I mean, I read virtually everything you know, if I don't write it, I try to read everything I post. I should read what I write too, but
I never do that. So
no, I just write it and send it out. Good luck.
I spend too much time. It's ready to go.
Yeah, but if I post something, odds are I've read it. And you'll see the sources of where I post because for me, they're relatively trusted sources, and none of them. I won't post opinion pieces, and we all see this. It doesn't matter the industry. I'm not even necessarily talking about LinkedIn or Twitter, but you can pay for attention, right? So I don't post or share with colleagues. Now I wish it was beer. I don't share with colleagues things that are, opinion pieces that are not, if they're not educational.
Right. By the way, that water is our host today.
Thank you, water.
So no, and opinion pieces you have to be really careful too,
because some opinion pieces are written for rage or to incite.
There's been a lot of that.
Right. And some opinion pieces are, here's my opinion about something, let's discuss. Mm-hmm. That type of opinion is going away.
Yes.
In this country and in this world, I would argue. The piece that says, here's my opinion, and if you don't agree with me, you're the bad guy, is becoming more and more prominent in the world.
Well, let's start with something. As a practicing lawyer, generally speaking, if I have an opinion and you don't agree with me, you are the bad guy. Right? But the reality is, I don't think it's going away, but I think it's becoming, but I think social media, it's such a poor medium for having a conversation.
Right.
We were built to actually sit down and talk. I think that's why podcasts are so popular.
Agreed.
Because it's two people talking.
Yep.
Right? So I'm with you on it, although I don't think it's really going away in the world. It's just that what we see is the negative side of social media accounts.
Yeah, we've made the negative side easy. Right? Because, take away social media. If you're in a dialogue with someone face to face and they are just, there's a bit of hyperbole, but they are just off the rails, railing that your opinion is wrong, that's not a conversation you're going to have with that person again. And arguably, it wasn't socially acceptable. Now you can hide behind the anonymity that internet affords you, or social media specifically affords you, and throw out the most diverse series of expletive things that do nothing to add to the conversation, and do it with absolute anonymity and almost absolute security. We can get into you violated Twitter's terms of service and all of this other stuff, and
which is a problem in and of itself.
Which is a problem in and of itself from a free speech perspective.
Yeah, everyone is being deplatformed because they don't agree with what is the current technological. Political bent, and that's bad all around. You don't want it on any level.
That's right.
So
social media, personal opinion, has made incivility acceptable and safe, and that is why you see fake news. That is why you see this kind of lack of civility in online discourse, which is not what it was meant to be. I don't know what that solution is, but. And that incivility spills over, just what we were talking about with LinkedIn, for example. Someone can, I don't even know what the percentages would be, but there's nothing to stop you from saying, you graduated with an MBA from Wharton or something.
Right, it's true.
And no one's going to check it unless it got raised in a specific incident. And Wharton said, no, he never graduated.
I hear people talk also, though, a lot about blockchain and what it's going to do from a verification perspective.
Yeah.
And I'm somewhat suspect of that. I think it's gonna take a longer time for it to get. I think ultimately it can do that.
Yeah.
But I feel like we need to really build the infrastructure and have many different kinds of blockchains before we can really get there.
Yeah.
Well, what do you think about that?
Yeah, I agree with the idea that we have multiple blockchains now, right? What's really happening is this kind of standards and interoperability conversation. Not to overwork the technology aspect of it, but there will be blockchains based on Hyperledger Iroha and Hyperledger Fabric and Ethereum and R3 Quarter and Quorum and all of these others. Yeah. Stellar, for example. And there's work going on right now to interoperate them at a technology level. And I think it's R3 Quarta that is able to send transactions to Ethereum. I'm probably screwing something up there, but some of those prototypes are happening now. Mm-hmm. The working models of why you do that haven't evolved yet. Right?
Right.
It's
yes.
What's the reason for doing this? And I do not doubt that will happen. Mm-hmm. But as these centers of gravity evolve and how they interact, they'll still need to answer the question of what are you trying to accomplish? What's the use case? I think something more fundamental is happening as well. And it goes to your the conversation point you brought up earlier about when we were talking about LinkedIn, and it really is a fundamental question about identity, right? Because all of the challenges that we talk about in did Ron go to Wharton, and is this person a fake account, and is this corporation a real corporation or a shell someplace in BVI, ties to fundamentally to identity. And how do we define our identity as individuals and as, under law, corporations as individuals, right? And I think in the long tail of it all, that blockchain may help define identity in a portable, verifiable, trustless way. I don't know what that is yet. I honestly suspect it'll be some biometric engagement as well, which is a bit scary. But what if...
Is it going to be in our eyes like what was that movie with Tom Cruise that has predicted I don't know how many things in the future already?
Which one?
It was the one with the people that could sit there and they could
Cruise?
tell the future. Yeah, it was really it was a really gritty movie. I'm gonna take out
We have to look that one up.
my phone. Hold on, my phone is over there.
Is-
Grab my phone. It's on the tip of my tongue. I can't remember what it was.
Not Oblivion.
No. It wasn't.
Not
Hold on 1 second. I'm gonna
movie,
get this.
beer, blockchain.
I know, right? Well, anyway, so I'll figure out while you're talking.
But imagine a world where if I'm on a future equivalent of LinkedIn, that I don't have to doubt that the profile of the person I'm looking at, Jason Nagi, is accurate. That the profile of Jason showing him graduating from law school is correct.
Right.
Versus the spam mail that you and I get, and so many of our colleagues in the industry get over and over again, that talk about someone who's a business school graduate who's got an interesting ICO that they want you to invest in, and imagine if you can be confident because of the technology that the person you're talking to or corresponding with is who they say they are. And imagine it gets to that level of acceptance, the way the internet's a level of acceptance for us today. No one, I mean, we worry about scams and cybersecurity and all that stuff, but when you look at the mass of people, most people go online and almost without exception don't doubt what they're reading. Does anyone doubt what's on Google?
No.
Does anyone doubt what's on Wikipedia? And I get that it's
Should doubt what's on
self-publishing.
Wikipedia,
Right,
but-
right. But over time, what if blockchain enables identity more securely? What does that do to identity theft? I mean, how many billions are lost in this country alone every year from identity theft? And what if that couldn't happen? And so I think the fundamental layer of internet of value is actually internet of identity. And I think once we solve that, a lot of different pieces of the what can this do for us puzzle begin to fall into place.
Interesting.
Did I digress enough?
No, I mean that was a really good point because you're right. I mean, you're absolutely right about that.
And identity in law, and identity in finance, and identity in healthcare.
How do you see it developing? How do you see that developing? By the way, that was Minority Report.
Oh, right. Okay. Good movie. Good movie.
Got to get somebody else's eyeballs, and then all of a sudden you're Mr.
Oh, gross.
Was it Nakamura?
Sorry.
Mr. Nakamura?
Mr. Nakamura.
I think it was Mr.
It was.
Nakamura.
Gross. I don't know how it'll develop, and I think it's a very sensitive thing. I think people are very vested in their own identity, and how do you tell people to trust a platform to manage your identity? I don't know that answer, and but I suspect as generations come, they'll be more comfortable with that, right? I mean, we grew up in generations that, I mean, to this day, if someone asks for my social security number, I'm either hanging up on you or just walking away. I mean, I would never share that. Right. That concept of privacy is evolving away, right? When you look at Generation Z, or they don't care about privacy.
No, they grew up
care
on
about
Facebook.
Right. They care about gratification and attention. And I don't mean that as negative as that sounds, because that's what they get from the digital world that they live in. right? Almost immediate gratification. All of us. I mean, especially in major metropolitan centers, you can have food or drink delivered to your. In New York City, you can have food or drink delivered to your door almost 24/7, probably 24/7.
Yeah, I would think it is 24/7.
Right, exactly. You can have virtually any movie or bit of music instantaneously.
Yeah, whenever you want.
Whenever you want, online. That's going to accelerate over time, that demand for instantaneous attention. And so the ability to accelerate that and leverage something like blockchain technology and AI, maybe, to confirm authenticity, that we know it's Ron ordering that bottle of wine being delivered at 2 a.m., maybe generations to come will be very comfortable with that.
Right. I think that's probably true.
Yeah.
I think that's probably true. What do you think we're going to see this year?
This year
In Bitcoin.
I will not price predict. I will never, ever price predict Bitcoin. So I think for blockchain particularly, when you see some of the headlines, I'm really confident that some financial firms will start dipping a toe more deeply in what I'll call line operations, the day-to-day stuff that is revenue significant, leveraging blockchain technology. I think it was this week, Northern Trust announced that they were going to be accelerating or spreading the adoption of the blockchain technology that they're using, I think, for syndicated loans.
Oh, wow.
More deeply within the organization. I think from a crypto asset perspective, Fidelity doesn't do what Fidelity does, and staff found a Fidelity digital asset division by accident. So I suspect, pardon me, that they'll the adoption of crypto assets and the ability to offer them to institutional clients will begin to accelerate as well, particularly in light of kind of some of the economic projections that are happening, right? I don't know if you read some of the economic reports, but
tell me what you mean.
So there's a kind of growing upswell of belief that later into 29 or most certainly into 2020 that we're heading for potentially a relatively significant recession.
Well, we haven't had one. This is the longest running.
Right.
It's not really bull market, but the
not bear market.
Yeah.
Let's that right. A slow kind of flatlining recovery for a long time.
From when did it start? Did it start in 2009 or 2010?
I think it was late 2009.
So we're 10 years.
Going on 10 years, right.
I mean, we've never had one that long. And people were saying that 2 years ago.
Right, exactly. And so if in truth we're looking at potentially a recession, and being 10 years down the road, you will begin to have the tools to interact with financial instruments, or what I'll call broadly crypto assets, that are negatively correlated with some of the things that will be negatively impacted in a recession, potentially.
Negatively correlated. So in other words, if the dollar goes down, crypto will go up?
Maybe crypto will go up. If gold goes up, let me rephrase it. If stocks or equities or fixed income or other instruments go down, potentially crypto assets will go up. Or crypto assets and smart contracts that are written as derivatives of some of these things, right? Then it becomes just another evolution of global financial markets.
Has that been done? Are people actually writing derivatives of crypto yet? Or is it just? I think it's being just spoken about.
I know that there are colleagues that are looking at that at what I'll call a financial engineering level. I don't know that that's there yet. But
because
the average
ETFs, Bitcoin ETFs, were all rejected because essentially the SEC. And you correct me if there's other stuff, but I believe it was essentially that if you were going to condense it into one thing, they just didn't really understand the markets and what was motivating the markets. That seemed to be the reason for the rejection of the Bitcoin ETFs this past September and August.
I think that's it in part. I think one of the core things the SEC was really concerned about is that the petitioners for ETFs, so Van Eck and Gemini and some of these others, Solidex, they were not able to comfortably prove to the SEC that market manipulation wouldn't happen. One of those kind of core pillars of what would get the SEC commission to approve an ETF. I think that's evolving as well. I don't think an ETF will be approved in the early part of this year, in first half. I could be totally I think towards the end of the year, it will something will be, and some of that makes sense. Look at how Coinbase is evolving. Look at how backed the KKT, the exchange, backed by NASDAQ, I think it is, kind of this institutional exchange. Sorry. As those come to fruition, and they all have financial service executives with experience, and they have compliance programs, and they have market monitoring programs, that the ability to approve an ETF will be much more comfortable. And once you do that, you start opening the door to a whole litany of different types of financial instruments, different derivatives, different swaps, different types of hedging strategies, and it'll be crypto, fiat crypto. But we'll see.
One of the things, and we can end. We should probably.
How long have we
start wrapping it up? I don't know. I think it's been about an hour. An hour and 30 minutes. Okay, this is a long one. All right, so one of the things that it seems to me cryptocurrency and blockchain has done is it's reinvigorated the trading industry. That, from my perspective, had been dead for a while. I remember in the 90s, the early to mid 90s, maybe into the late 90s, you had a lot of people that were called day traders.
Oh, yes.
And that just meant that they traded back and forth, that they weren't backed by a broker, and they were just trading their own money. Everyone was a day trader. I mean, everyone I knew was a day trader, and they were making money in IPOs somehow. I don't know how they did it, really. But that quietly disappeared in the mid-2000s. By the mid-2000s, it was gone.
Yeah.
And I don't know why that is. I haven't really.
I'll tell you why.
Tell me.
Because I was there, and I remember it, and we had customers when I went into financial technology that were they were called day traders. Those in the know working on financial markets, we used to call them SOES bandits. SOES. Anyone who's been in financial markets for a while, you will have heard that phrase, stock order entry system, stock order execution system. When stock markets became more electronic, the ability to engage and trade an arb opportunity really became more prevalent, right? You could have software in a terminal, and you could see IBM trading at a certain price, and you can snipe off 5 cents per share and just wait for it to move, and you can rapidly execute another trade. And that worked for a while, right? You could, and I remember banks of traders kind of doing some of this stuff. And then what happened as that evolved, the people who made real money in day trading were the firms and platforms that offered day trading services, picks and shovels, right? Using the gold rush analogy, to the people.
George Orwell wrote a whole book about the economics of that, or it was in one of his books. It was, I forget the name of it.
Really? I've only read 1984, so I don't. I know he had Animal Farm and a bunch of others.
It was one of The Road to Wigan Pier, WIGAN Pier, and he talks about the economics of miners and how the companies were making the money selling them the pickaxes.
Yeah.
Because you had to buy the pickaxe from them and all the other stuff, and just how miserable their lives were. So when you say that they're selling shovels and axes, it's got a really, really deep resonance if you understand what happened in that industry even as recent as the early 1900s.
Right.
So,
and the model is the same, right? So when you had these day traders, the platforms and service providers that created these for these people who wanted to be day traders, and at first it was Wall Street people, right? Financial markets people. And then that kind of devolved a bit. Then it became, if you're new and out of school and you give us $10,000, then we will set you up with a desk and make you a day trader on Wall Street. And then that became, if you don't have that $10,000, we'll lend you that $10,000.
That's dangerous right there.
Right.
You've got no knowledge, no training, but here's $10,000
to
lose.
And sometimes it's $50,000, sometimes it's $100,000. Wow. And what they were really doing was they were financing debt, and they'd get a piece of whatever trade they might have been making money. And they had these training programs, and we'll teach you to be a day trader, and on and on and on. But the innovation, the technology that allowed you to electronically day trade, and in the wake of some of the regulation we talked about earlier, best execution and consolidated ticker, consolidated tape, that technology also eliminated those arbitrage opportunities. So what happened was all of these, particularly young people who came in and wanted to be day traders, very few of them became millionaires. A lot of them lost a whole bunch of money. The people who offered the platforms made a lot of money until there was no arb opportunity for them to participate.
Right, so
and then
the
they just went away.
accuracy of information actually killed the industry.
That's right, and the
Or
ability,
the availability of information.
the
what would you say?
availability, and the ability to action that information rapidly, compress the spread to nothing that would be workable for an individual. Now plug computers into that, where the computer's doing the trade.
Computers of the future.
Computers of the future. Plastics. If anyone can reference what that movie is, get back to Jason.
Those Trading Places. Was it Trading
That
Places?
was The Graduate.
That's right. That's right.
Which is way older than most of the people who will be watching this.
Yes.
But the as those prices went away, and then you plugged computers in to do more then that's when high frequency trading began.
So high frequency trading killed the day traders. Is that what it is?
I think technology and innovation, and the ability to access prices more rapidly, killed the human component of day traders. And then computers and high frequency trading occurred, and day trading, which conceptually was meant to be, I'll hold a position, I'll be out of all my positions at the end of the day. A computer would say, I want to be out of this position in 9 milliseconds.
Right.
Whatever, exaggeration. So again, technology compresses the time required to do these things. I don't know how we got on day traders, but that's where they went.
But you're a financial markets guy, so all of this is how it's all relevant. You know, I mean, we were talking about cryptocurrency and how cryptocurrency trading has seemed to reinvigorated the trading industry and the day traders that we knew in the 90s and in the 2000s kind of just disappeared quietly.
Right.
So
and they've been replaced, right? When you look at the Wild West aspect, right, by algos. And now look at crypto markets, right? So a good chunk of the past decade, where there's been liquidity, has been in arbitrage in many regards, right? People that had gotten Bitcoin at a low price would offload it, and then you'd see arb opportunities, particularly given the volatility of a Bitcoin, for example. But as that market evolves, and the tools to analyze that market, the tools to price that market, the tools to interact and trade with that market at a programmatic level, those arb opportunities will begin to decline as well.
Interesting. So
10 years from now, Bitcoin, assuming Bitcoin survives, I think it will.
How is it not going to survive? I mean, it's electronic mode. As long as you have someone who's willing to process a transaction and accept payment in Bitcoin, it's going to survive.
Agreed.
I just don't see it going anywhere. Maybe is it going to be at 20,000? I didn't think it was at 20,000. It should have been at 20,000 when it did. I mean, I didn't buy it. I told everyone to stay far away from it that I knew.
Me too.
I believe in the age old truth. Buy low, sell high.
Buy low, sell high.
No, but I mean, it was obviously inflated at that point. And
so that's interesting. But why? Why do you think it was obviously inflated?
It was massive. It was massive growth. What was Bitcoin trading at in January 1st, 2017? Was it 1,000? 2,000?
Right. It was 19 and change, 18 and change.
So it went 20x. 10x. Sorry, 10x.
I
mean, when you
most of that was in the 3 months before.
Yes,
January of 2017.
It's crazy. So when you see growth like that, it's an obvious bubble.
Yeah,
you know, and I think that and that's the problem. I mean, I don't know how you value these things, and that's a separate podcast. Maybe I'll get you and Jack on here to talk about that.
Jack Tater.
That's right, Jack Tater, who's the head of
he chairs the crypto asset working group of the Wall Street Blockchain Alliance.
That's right, and I had a lot of fun asking him questions about Nouriel Rubini's testimony. One time.
Oh yeah, did you give him a couple of drinks?
No, I didn't. Yeah, you were there. Were you?
Was it the holiday party?
There? No, not the holiday party. We had we had the crypto assets working.
Oh, the meeting. Yeah,
the meeting. That was fun. That was right after Nouriel Rubini. So
that was a hoot.
That was so, and I wanted to talk with you about 51% attacks in Ether Classic. But so why don't you just tell us, like, give me 2 to 5 minutes on what your take is on the 51% attack. Let's let everyone know what it is, and then we can end with with just a couple of really easy rapid fire questions.
I love the rapid fire.
Kidding about that, but
I'm okay with the rapid fire. All right, so oversimplifying, but a 51% attack is this idea that for a public blockchain, a public crypto asset, some entity or actor or actors colluding or collaborating together could consume and control over 50% of all of the mining power associated with the maintenance of a particular crypto asset.
And if that happens, so what?
And if that happens, basically they own the market and can create or fork a particular chain, and you begin to engage the problem of double spending. You're creating crypto assets that ordinarily could not be created. And
Is it double spending or is it stealing, actually?
It's the theft of tokens from the particular blockchain that creates that particular crypto asset. And so the event you're referencing now, this week, was that Ethereum Classic. Someone or people or gathering of groups.
If it's 51%, it would have to be a number of people, right?
It depends, and I don't know the specifics, but so here's the real problem, right? What do you require to engage a 51% attack successfully?
I don't know. I mean, you need hash power, right?
Or even more fundamental than that, but that's true, a small community.
Yes.
Right?
I agree. That's the right.
Right. So
it was in the Hacker Noon article that I read where it talked about the weaknesses. And
right. And
it's a small community. So why don't we talk about?
Yeah. So when you look at the Bitcoin blockchain, just by way of example, I don't know the specific number, but thousands of nodes around the world that operate as either miners or validators. I think Ethereum, and again I could be mistaken in the number, I think is at least twice the size from a miner and validator perspective of the Bitcoin blockchain. Probably worth checking those numbers. But large, very large networks. Smaller networks require less resource to take over 50% or more of the mining and hashing power of a particular network. So one of Ethereum Classic's problems, as I understand it, again, not being a technologist, is that compared to these other large public blockchains, right, it's not that large. It was relatively easy to have adverse parties collude to control the mining of Ethereum Classic, and hence the theft of transactions, right? You're essentially stealing these tokens by saying a transaction happened that didn't happen, or vice versa, making a transaction happen that wouldn't have been accepted by a widely accepted blockchain,
so in other words,
validated.
So in other words, what you're doing, this is how I look at it.
Yeah.
But the way I look at it is you're going back and you're rewriting blocks.
Yes. You're rewriting history.
You're saying, yeah, you're going back and you're saying, okay, you got a big old eraser, and you say, okay, that block didn't happen. That money went to my wallet here, or this wallet that I own, not to that wallet. And then it becomes accepted by the 51%, the majority of the nodes, and all of a sudden, everyone now agrees that block, that ether is yours.
At least for the time it took to steal those tokens.
And then I'm assuming that the money was the money transferred out of that wallet. Can they go back and unwind it?
I don't know. I know that, and we're doing some archaeology on this ourselves at the WSBA. But I know that several of the exchanges that were carrying ETC, Ethereum Classic,
Ethereum Classic ETC,
had suspended any transfers or transactions.
There were a number of them that did.
In ETC, and don't be misled that there are not tools to do this archaeology,
right, and
track where these transactions were, which were the fraudulent transactions, in many instances down to an IP level, where they came from, who did it, or at least enough of where that who was, right, potentially to take some action. And there's some vendors and tools out there now. But that's it is reflective of the reason that the Bitcoin blockchain exists and can only exist is if it's a large enough network. In a large enough network, that hashing power, the ability to steal, and engage a 51% attack starts to approach really difficult or impossible. And that's the key. That's why blockchain, and I'm using the phrase wrong, is kind of the public blockchain maximalists, the people who say that anything that's not a public blockchain is not a blockchain. That's one of the core theses that they have. Because in the absence of large-scale network, these problems can happen.
Okay. All right. Great. So
No rapid fire question.
we're gonna wrap up, but so tell us kind of what you're doing, what new projects you're working on. Tell us about your Twitter handle. Let's get all that stuff out there.
Sure. So I am on Twitter as @RunQmen. Also, the Wall Street Blockchain Alliance is at Wall Street BTC. We are kicking off an entire series of new working groups. You're part of some of that. Our legal working group, multiple work streams there. Our crypto asset working group. This week, we're kicking off our enterprise solutions working group here in New York, focused on enterprise implementations and solutions and coordinating with different industry participants to make that real. We have a whole new bevy of corporate members who've joined, which is really, really cool. New content coming out that will be relevant for the marketplace, we think is really interesting. And me personally, I am in Poland giving speeches in February about blockchain to a whole bunch of bankers, which is interesting, in Europe.
Nice.
And that's it. There's more, I'm sure, but we'll be back.
We'll put it up on our podcast site too, so you can have whatever you want. Okay, great, and thank you for coming, Ron. It's been an awesome discussion, and I hope that we have a lot more.
You're stuck with me. Thank you, brother.
See you later.